I view a couple different layers, and it's always tricky to find out which layer is the most important. But by having a kind of a framework that puts layers, that's how I've seen it play out. And so, for example, the biggest correlation that Bitcoin has is mostly just with its own adoption cycle. And so basically, if you look at say put Bitcoin aside for a second, if you look at a really high performing growth stock, it almost doesn't matter if it's in a recession or an expansion, that stock's still growing. It's just doing its own thing. And of course, the valuation might fluctuate to some extent because market sentiment's going over the place. But they're going to be less impacted by a recession or an expansion than, say, a bank stock or an energy stock or an industrial stock, right? So partially, Bitcoin is you're monitoring the health of that. What does the adoption look like? What's happening in the industry? Are insurance companies buying into it? What are the hardware wallets doing? What are some of the other applications? How is the Lightning Network developing? And so one is I'm watching the underlying fundamental growth of the ecosystem and the user adoption over time, and how that's being perceived. And so, if you look at the last 12 years of Bitcoin's existence, the tightest correlation is with its own halving cycle. And so for people that aren't familiar, Bitcoin generates, a number of new Bitcoins every 10 minutes on average. And in the beginning, when it was designed, that was 50 new Bitcoins were created on average every 10 minutes. And then after 4 years, that was pre-programmed to get cut in half. And so then it went to a 4-year period where 25 Bitcoins were created every 10 minutes. And then after that, it was pre-programmed and it shifted to 12.5 Bitcoins every 10 minutes. And now we're in that fourth period where it's 6.25 Bitcoins every 10 minutes. And that's set to continue for the foreseeable future until you basically asymptotically approach no more Bitcoin. And generally what happens is that you in the beginning you had a big spike up in price, you got a blow off top, and then eventually the overall ecosystem finds an equilibrium price where it becomes relatively tame by Bitcoin terms, where it's in this big kind of choppy sideways pattern, and that's when you get a supply shock, right? So you get this, the halving cycle comes in and says, okay, well now we're going to cut new supply in half at a time when demand is still relatively persistent, and then eventually you get that drives price up, and that brings in momentum traders, and then that fuels an adoption narrative. That eventually gets to extremes and has a blow off top, and then it crashes, and then it eventually finds another equilibrium, and 4 years later the halving happens again, and there's a supply shock, and then it drives the price up, and momentum traders come in, and we've gone through this cycle about 3 times. And so overall, if you look at the historical chart of the price in log terms and put the halving times on it, it's a really uncanny relationship. It's the closest thing you see to like a clockwork algorithmic pattern, which makes sense because Bitcoin is an algorithm, and its price chart ends up looking rather algorithmic. Now, when you then go to the more micro layer, especially during that period where it's finding a consolidation, so it's not in an extreme bull market phase, then it tends to have more correlations with some of these macro factors. And so, for example, when we had the big liquidity shock in March 2020, Bitcoin went down just as hard or harder than anything else because it's partly a liquidity play. It also just tends to benefit from overall risk-on, risk-off behavior. So it generally is a more risk-on asset, especially when it's in that more consolidation period. And so overall, what I'm watching now is that it's still largely in a post-halving cycle bull market, as far as I'm concerned. And so I watch some of the on-chain indicators to see how that plays out. So, for example, because it's an open source blockchain, even though you can't necessarily see what individual people are doing because there's a layer of extraction between someone and their address, you can still track what's happening with the overall public blockchain to see, okay, what percentage of coins haven't moved in more than a year? What's happening with new coins? Are people selling their coins for a higher price or a lower price than they bought those coins? And so there's a bunch of different indicators you can watch, and you can compare them to previous cycles. And so what you see generally during a bull market is that some of the long-term holders, trim their positions into that because they're up 5x or 10x or more. They sell to the new generation of buyers. And if there are times where you start to get a correction during that bull market, a lot of those long-term holders stop selling. And so that kind of helps solidify the supply, and basically the price has to keep going up if you're going to get those coins out of their hands, because a lot of them, they're not holding their coins on exchanges, they're holding their coins in cold storage. So for them to sell means that the price has to do something it could be that they panic and sell, but those are long-term holders, so they tend to be more about looking for higher prices to sell into. And so there's a very large percentage of Bitcoin that is basically just off the market. It's just in cold storage, and you need to pretty much pry it out of their hands with higher prices. So I watch things like, are coins going to or from exchanges on average? Are long-term holders selling, or are they holding? What are some of the extremes? Like if you compare the market capitalization of Bitcoin compared to the realized capitalization of Bitcoin, which is essentially a measure of a cost basis, kind of the average price that all current Bitcoin were purchased at originally, and just kind of compare different indicators like that to see what's happening within the broader context of what's happening with some of the custodians, what's happening with insurance companies, what's happening with did another company come and say that they're going to put it on their balance sheet or not? How's the development of Lightning and some of the applications that make it easier for people to get access to it and to use some of the other layers that are on top of it. And so that's overall how I approach it. And so, for example, when I initially covered Bitcoin professionally back in late 2017, I passed on it. I analyzed it in November 2017. I said, it's like 7,000. It's gone up really far. And I have certain concerns about some of the things happening in the ecosystem, like the Bitcoin Cash split from Bitcoin. And said, I said, maybe you can play with a couple percent, but I'd be very cautious here. And so I took no position. And of course, you almost tripled from there. So you went up to like 20,000. Then you crashed and you went down to like 3,000. Then it just underperformed for a couple of years and it was choppy. But it was in April 2020 where I said, okay, now it's 7,000 again. But it's in my view significantly de-risked and stronger fundamentally in terms of where it is in the halving cycle, what price action has been recently, and some of the developments in the ecosystem. So most of the indicators I'm tracking look to be somewhat mid-cycle in terms of the bull market, and so it's less of a kind of a slam dunk in my view than it was back in say spring of 2020 and summer of 2020, where you could buy it for 7,000, you could buy it for 9,000, you could buy it for 10, 12,000. So that, in my view, was a kind of a very asymmetric play. Now that you're well over 50,000, in my view, it's somewhat less asymmetric, where your probability of getting 10x gains in the next year is less than it was back then, and your downside is somewhat greater. But I still overall my base case continues to be for higher, unless we see certain signs play out. So we start making lower lows. That's when it gets concerning. But looking at what's happening with the on-chain indicators, some of the long-term holders have sold into this rally, but still a very small percentage compared to previous rallies. And then, in particular, over the past month, as Bitcoin has been a little bit more choppy, those long-term holders pretty much stopped selling and just they just kind of kept holding from there. And so basically, they're basically saying that the price isn't high enough for them to continue selling into. And we also saw some indicators that people are still essentially refusing to sell at a loss. And so if new investors come in at these higher prices and then Bitcoin has a correction, some of them are willing to sell, but once they start selling at a loss, they pretty much stop. And that tends to be what happens during a bull market in Bitcoin terms. The only time that you see mass selling for lower than their cost basis is during those deeper bear markets. And so overall, I think the base case looks healthy. The one thing that's kind of different from previous cycles is that because Bitcoin was earlier in its issuance rate, you had the number of coins on exchanges keep going up. So even during a bull market, you generally had these short periods where coins would leave exchanges, but on average, coins or exchanges kept going up. Whereas in this cycle, we're something like 15 months into a period of coins just keep coming off of exchanges, and that's never really happened before. And so in some ways, that's more bullish than anything I've seen before. But it's hard to say exactly what that means because we don't have a lot of historical context for that.